hello guys hello guys and welcome to this training. So I'll be sharing with you some things related to forex trading, some key terminologies and concepts that you need to know when it comes to forex trading. So I need you to take your notes and write some of those things down. So what is a pip? There is what is called a pip in forex trading. PIP, pip. Let me write it for you so that you can see. PIP. So what is a pip in forex trading? A pip is a very small measure of change in a currency pair in forex trading. So a pip is the smallest change in price. Okay, so how do you know a pip? For example, let me give you some example of a price in forex. So we have 1.7633. so 1.7633. If we're to look for the pip is the fourth place after the decimal point. So this is the first, okay, this is the second, this is the third, and this is the fourth. So this number 3, that is where you calculate your pip from. Okay, that is where you calculate your pip from. So the next number, which is this, most times you don't, these numbers are the number of price, but most times you don't talk about this price because it's not really the major thing. Okay, so the fourth number in a price is what you always look out for. That is the pip position. That is where you calculate your pip from. That's where you see your pip from. So I'm going to give you an example of changes in price, and we're going to calculate pip there. So if you want to trade, for example, now you say you want to target 5 pips, you want to target 10 pips, you want to target 20 pips. Okay, that's how you make profit. And if it is lost, then that person is like, oh, you placed the trade and you lost, and you lost by 20 pips. Okay, when price is moving, and we can calculate the movement of price by calculating the number of pips. Okay, when you want to calculate the movement of price, you calculate the number of pips. So you can say price went up by 20 pips, price went up by 85 pips. Okay, so let's look at some things now. Let me put some prices here, then we would let me put some prices here, then we'll do some calculations so that you can understand it. So when you're looking at your MT4 and you see price, you'll be able to calculate it. Okay, so let's assume we have 1.5329. Remember, this fifth number, you can ignore it. It's called a point or a pipette. This number 5 position is called a point or a pipette. Okay, so this is, let's assume this is the current price. Okay, now price now moved from this number to 1.2460. Okay, so now you can see that price has changed from this current price to the second price. So how do you calculate the number of pips? So what we want to do now is to calculate the number of pips to know the number of changes that happen to price. So from this place to this place, how do we calculate it? Let's do a manual calculation for now. So if you take out this, it's still 0. We want to know the new price. Okay, we want to know the number of pips. Okay, if you take out 6 from 9, what do you have? You have 3, right? You have 3. Remember, this fourth place is where we are interested in. That is where the pips starts from. That's where the pip value starts from. So 6 minus 3 or 9 minus 3, you have 9 minus 6, you have 3. If we take out 2 from 4 or 4 from 2, we have 2. If we take out 2 from 3, we have 1. Okay. If we take out this, we have 0. Then the decimal point, then 0. So how many pips is this? 1 from the decimal point, the first, second, third, fourth. So this is where we are starting to calculate our pip from, but we can't calculate it to the front. We would be calculating it to the back. Okay, so with this now, we can't say 3 because we can only say 3 pips if there are nothing here. But since there are some numbers here based on the changes in price, we can say this is 123 pips. Okay, so from this price to this price, it was 123 pips. Did you get it? 123 pips. That's a major move. So that means price was moving like this. I'm sure some of you see how Forex goes, the price movement. So that means price moved, and moved. That means if it was an upward movement, then price moved 123 pips. If it was a downward movement, that means price moved 123 pips downward. Okay, let's do another example so that you can get it clearly. So let's do another example and wipe out this. We're going to do another example with that. Okay, I believe you're getting it, because the goal is for you to understand how to calculate pips so that it will be easy for you to trade. Let me clear out the screen. Okay, let's do another calculation. We're doing calculation of pips. Okay, let's assume that price was 0.3974.6. Remember, this fifth number is point or pipette, but we are interested in the fourth number, the fourth position after the decimal point. So after this decimal point, we have 1, 2, 3, 4. This fourth position is where we are interested in. That's where our pip is. So that's how we calculate our pip. Okay, so we want to look at 2 different prices and know the changes in price. So this is 39294. So how many pip is this? The movement of price here, how many pip is it? Let's look at it. 6 minus 4 or 4 minus 6, anyone, we have 2. 4 minus 9 or 9 minus 4, we have 5. 7 we have another 5, 9 and 9 we have 0, 3 and 3 we have 0 0.0. So with these, how many pips? What we have here is 0 points. We have 55 pips. Okay, what we have here, we have 55 pips, 2 points or 2 pipettes. So I'm going to give you a task for you to do now, just to be sure that you are getting it. So let me give you an example. A task to do. We have 0.7793, 0.5717. So calculate this, type it in the comment. How many pips is this? The changes in price is how many pips here. So type your answers in the chat, okay? So I give you 1 minute to do it. Okay, so let me guess. Let's work it together. So if you take out 7 from this, we have 4. This we have 8. We have 0 and we have 2.0. So how many pips is this? This is 208 pips, 4 points or 4 pipettes. But don't bother yourself about this. What we are interested in is the number of pips starting from here, and we calculate backwards. And if these are 0 and 0, then it is just 8 pips. Okay, 8 pips is a major move in Forex, so don't try to target 200 pips and the likes. Okay, so let's move on to the next thing. When you see price is in pairs, currencies are in pairs. That is what Forex is all about. Okay, you are trading currencies, which means that you are trading between 2 currency pairs. So in Forex, you will see something like this: USD, JPY. Okay, once you see something like this in Forex, the first currency here, they have a position. There is a name for their position, okay, which you need to be aware of, and you need to, it needs to stick. Okay, so this is a base currency, BASE, okay, and this is a quote currency, QUOTE. This is a quote currency. Okay, so sometimes you can see a line in between the two, sometimes you may not see the line, but we have a base currency and a quote currency, which means you're buying one currency, you're selling one currency. So you need to know this anytime you see it. If in case you're trying to do a task online and you ask that, oh, what is the base currency, and you see something like this, always know that the currency on the left is the base, the currency on the right is the quote currency. Okay, so let's move on. In Forex, we have different players there. Banks are also trading with currency pairs, and we have large institutions that also trade the currency pairs, and we also have what is called the retailers, which are people like you and me that are also trading in the forex market. So we have the banks, the central banks, we have large institutions, and we also have retailers, and we are the retailers that trade in forex. Okay, so let's go to the next thing, forex broker. So who is a forex broker? These are firms that provide currency to traders to trade. These are firms that provide platforms for traders to trade. Okay, these firms are known as broker. So you can call them forex broker, you can call them FX broker. They are the ones that are providing that opportunity for you to trade. It's like let me give an example that is not related to it, just for you to have an idea. You have the money, but you need a bank, okay, where you will save your money, where you will deposit your money. If you want to send money to me now, or you want to send money to somebody, you need an institution called a bank where you can send the money from, where you send the money through the bank, and the bank has enough volume and enough facility to process that payment to any country of choice that you're sending to. So a broker is like a bank. A broker is an institution that helps you to trade these currencies. Imagine that you want to do forex and you don't want to do it through a broker. That means you need to go and get the other currency. You need to go and buy. You need to go physically and buy. If it's USD JPY, you need to go and buy JPY physically from the market, from the bank. It becomes so stressful, but forex brokers make it easy, that you just click and click, and you can click a button to buy, you can click a button to sell. So these brokers charge what is called a spread. These brokers, they charge what is called a spread. So a spread is a commission that brokers charge for providing their services. A spread is that's another term you need to get familiar with. I've mentioned pips and I've talked about brokers. Now I'm talking about spread. A spread is a commission that a broker charges. They are charging you for the commission. They are charging you for giving you access to trade on their platforms. So some of the things that you need to look out for as a beginner, when you, even as a professional, if you want to go for a broker, if you want to select a broker, what are the things you look out for? I'll give you some of them. Number one is you look out for the commission the broker is charging. If the broker is charging too high, then before you make profits, your broker is already taking out the money. Okay, if the profit you want to make, the spread of your broker is too high, then how can you make profit from it? So you need to pay attention to that. Your broker spread is one important thing you need to look out for when you're trying to select a broker. Another thing is the minimum deposit that the broker will allow you. Some will say $1,000, some will say $600, some will say $50 minimum, some will say $200, some will say $10. Another thing you need to look out for from a broker is their customer service. Can they respond to you when you are in need? If they cannot respond, you should not use them, because you always need the services of your broker, you always need their customer service to help you out because you are new to their platform. Then one more thing is the account type. What kind of accounts are they opening you up that you can register for? Or in the coming videos, I will definitely talk about different account types that you can open with a broker. The major platform used in forex trading is called MetaTrader 4 or MT4, but MT4 is already phasing out, and they are introducing MT5, MetaTrader 5, because MetaTrader 5 has lots of features that MT4 does not have, and is also faster than MT4. So you need to also be familiar with that. Okay, there are major pairs and there are minor pairs. There is what is called major pairs and minor pairs. Okay, so I also need to explain that to you. So there is what is called a major pair and also minor pairs. So, and there is also crosses. Okay, major, minor, and crosses, and also exotic. Okay, the differences in some of these pairs is that their spread is high and their spread is low, depending on which currency you are trading. Okay, so let me give you an example of major pairs. You can write them down. We have Euro USD. Euro USD is a major pair. Okay, Euro USD. USD. So this is a major pair. Okay, so you or you can call it euro. Another one is GBP USD. GBP USD is also a major pair. GBP USD. Their spread is very low. Their spread is very low. Okay, so what I will do is I'll send a list of these major pairs. I'll also send a list of the minor pairs. I'll also send a list of the exotic pairs. I'll send it to my Telegram handle and you can pick it up from there. I'll send it like a chart so that you can have it handy. Okay, these major pairs, you have Euro USD, GBP USD, AUD USD, USD CHF, USD CAD, USD JPY, NZD USD. These are major pairs. Okay, and there are major crosses also. We have Euro GBP, NZD CHF, Euro NZD, CAD JPY, AUD NZD, and CAD CHF. Okay, exotic pairs, their spreads are very high, so you don't want to trade it. Okay, it can take you out of the trade with a small account. Exotic pairs are like USD MXN, Euro TRY, GBP DKK, USD ZAR, CHF NOK, USD TRY. So these are exotic pairs. They are not common. They are not majorly traded in the forex market, so you should stay away from them. Okay, I'm going to stop this video here and I'll start another video, and the next video that you'll be watching will be more of the lot size. I'll talk about the lot size in the next video. I'll talk about some other things that you may need before you start trading, and once we're able to fix that, then we'll talk about one of the major things you should start learning, which is support and resistance. Okay, so thank you for watching. Remember to join the Telegram group if you're not there. Remember to check it often, because the tutorials, some resources would be sent there. Okay, thank you.